Hello again, JJ Zwada, Managing Broker, Indiana for Income Property Organization. Joined here again today with Kevin Jahnke, Broker, Indiana as well.
Good morning.
Kevin, last time we met, we discussed the incredible rent growth that we have seen over the course of the last 12 months in Indiana. And at the time, it was our expectation that we continue to see that rent growth throughout 2022. But of course, in the last 3 months, a lot has changed. The macroeconomic conditions, that being an inflation rate over 8%, the Fed raising rates, and the expectation they're going to raise rates again. You know, I'm curious, do you think that this rent growth can continue now that the average consumer's pocketbook is being stretched as far as it is with inflation where it's at?
To date, it has. Year over year, we're still tracking up about 10% rent growth in Indianapolis specifically, but the whole market as a whole has continued to rise. I don't think a lot of these costs have really trickled through to the tenants just yet. I know inflation is now coming up on, we're at 8 or 9 months straight of 6, 7, 8% year over year inflation, but the tenants themselves seem to be still absorbing these costs. Historically, especially when you're going for a mortgage, 25% was kind of that barometer for how much to spend on home or housing costs. That has adjusted to 30 or 35% over the last 18 months, 2 years, and I think you're probably going to see even more pressure on that as rents continue to rise. It seems like maybe towards the end of the year things will start to level off, but there's just been so many transactions over the last couple of years that naturally when a new owner comes into a property, their first goal is to increase rents. So with all those transactions, you're putting even more pressure on getting rents up, especially because of their basis being so high.
And moving up those housing costs up to the 35% range, that's just actually bringing it more in line with your East Coast, your West Coast averages. So kind of normalizing there a little bit.
Yeah, I mean, relatively, the Midwest is still the cheapest area in the country to live, and it's really not close. Both coasts and the Southeast are exceptionally more expensive. The Midwest is still, the most affordable place to live, albeit, to us living here seems more expensive. But you're adding more and more people to the rental pool with all this home buying pressure. Interest rates are now 5.5%. Home prices haven't come down yet. And so these tenants or would-be home buyers, now staying tenants, can't buy as much home or can't find a home to buy, and thus are going to be renters.
Maintaining the supply and assisting with just the continued growth.
Exactly.
Overall in the market, what are you seeing?
We haven't really seen any major headwinds from the interest rate raises over the last few months just yet. Transactional volume's still been good. A lot of those deals, though, were placed in contract probably just before or right around when interest rates started going up. So I don't think we've really seen the effects yet. Overall, it's just going to be an adjustment, mostly on the seller side. Underwriting models have obviously changed with, most interest rates, depending on what kind of debt you're getting, going up somewhere between 100 to 150 bips so far, with a few more expected hikes in the next 6 months or so. So, I think the demand is obviously still there. So the supply is still low. So until that changes, I think it's going to be status quo, albeit at probably different numbers.
Appreciate your time today.
Likewise.
Thanks for watching.